So what on earth happened in the Greater Toronto Area's real estate market in 2025? Well, it didn't just slow down, it pretty much hit a fundamental reset button. We saw prices drop and inventory climb, but guess what? Buyers pretty much stayed on the sidelines. So what was really going on, and what does this massive shift mean for the year ahead? Let's break it all down.
To put it as plainly as possible, 2025 was the quietest year for real estate deals in the GTA since the year 2000. Seriously, we have not seen sales numbers this low in a quarter of a century. Now that one fact alone tells you we're in a completely different world from the frenzy we've all gotten so used to.
You know, to really get a handle on this reset, we have to start with the data. The numbers for 2025 tell a really clear story, and they point to three key signals that the market was in a major transition. Okay, first up, and this one's a biggie. The total number of homes sold dropped by over 11% compared to the year before. A double-digit decline like that is huge, and it shows that buyers were just not pulling the trigger at anywhere near the same pace.
Next, for the first time in what feels like forever, the average selling price actually went down. Now, a nearly 5% drop might not sound like a market crash, but it absolutely moved the needle on affordability. And it marked a major reversal of that relentless upward trend we'd all just accepted as normal.
And here's the third piece of the puzzle. While sales and prices were falling, the number of homes actually hitting the market went up by 10%. This created a really crucial shift in that whole supply and demand balance, giving potential buyers something they haven't had in years, and that is choice. This chart really drives that point home, doesn't it? That gap, that's almost 8,000 transactions that just didn't happen. That represents thousands of buyers who decided to wait and sellers who couldn't find a deal. This wasn't just some number on a spreadsheet. It completely changed the feel of the market on the ground. So what's the big takeaway here? It's this. With way more homes for sale and fewer people buying, the era of those frantic, over-asking bidding wars has really faded. It's been replaced by a market that's all about negotiation, about patience, and about strategy. The power has definitely shifted, and pricing a home correctly matters again. A lot.
But, you know, the data only tells us what happened. To understand why it happened, we need to look at the psychology that was driving everything. And really, it all came down to a widespread crisis of confidence. And this brings us to the central puzzle of the 2025 market. I mean, think about it. With lower prices and more selection, you'd think buyers would be rushing back in, right? But they weren't. So what was holding them back?
The answer is something we can call the affordability paradox. It's this idea that a lower price tag on a house just doesn't matter if you're not confident enough to actually make the leap. People were worried about the bigger economy, about their job security, about the rising cost of, well, everything. That created a level of uncertainty that made even a more affordable house feel like way too big of a risk.
And you don't have to take my word for it. This quote from Jason Mercer over at the Toronto Regional Real Estate Board, it just says it all. Confidence is the fuel of any housing market. And when people aren't sure about their jobs or their financial future, they are just not going to commit to the biggest purchase of their lives, no matter what the price tag says. This is a really important point to understand. This slowdown was driven by demand, or rather a lack of it. The increase in homes for sale wasn't because of some wave of desperate sellers rushing for the exits. Nope. Inventory built up simply because buyers finally had some leverage and were taking their sweet time, which completely changed the pace of the market. Okay, let's pivot for a second. We've talked about anxious buyers, but now let's look at the immense pressure that's building on people who already own their homes. Because there is a major financial event unfolding right now that's going to impact hundreds of thousands of households right here in the GTA.
People are calling it the mortgage renewal shock. Think about all the people who bought or refinanced during the pandemic. They locked in interest rates at historic rock-bottom lows. Well, as those 5-year terms start coming to an end, they are facing a very, very different reality with today's much higher rates.
And this isn't some abstract problem. For a lot of families, this renewal could mean their monthly mortgage payments are going to jump by anywhere from $300 to $800 per month. That is a significant, painful hit to any family's budget.
And the scale of this thing is just massive. Get this. By the end of this year, an estimated 60% of all outstanding mortgages in Canada will have gone through this renewal process. This huge, widespread financial adjustment is a key factor we all need to be watching because it's going to directly impact household spending and market stability.
So with all this short-term craziness, it's really easy to lose sight of the bigger picture. So let's take a step back and look past the immediate reset to the deep, structural issues that are going to be shaping the GTA market for years to come.
Despite the current buyer's market, the fact is Canada has a chronic, long-term housing shortage. To keep up with population growth, we need to be building almost 300,000 homes a year. And historically, we've only averaged about 176,000. This underlying supply gap isn't going away, and it's going to continue to put upward pressure on prices in the long run.
And the rental market has its own weird paradox going on. Vacancy rates in Toronto have actually climbed to their highest level in 4 years, which means more units are available. And yet, average rents are still rising faster than wages are. This disconnect just goes to show that even with a bit more supply, real affordability is still a huge challenge for renters.
So all of this leaves us with a really critical question. We've got a market that is reset on price but is being driven by anxiety. We've got homeowners facing a serious financial squeeze, all happening against the backdrop of a long-term supply crisis. In this incredibly complex environment, what is the right strategic move for you? Answering that question, figuring out the right move for you, well, that requires a level of detail that goes way beyond this quick overview. For the kind of strategic insights on how to navigate this complex market, the full in-depth audio update from Manoj Atri, Realtor with RE/MAX Hallmark Realty provides the expert analysis you really need. And that wraps up our breakdown of the 2025 Real Estate Reset.